Hey guys, welcome back. Now, Harvard-trained economist Harry Dent is back, and with the same big prediction as last year, in that there's a big crash coming to all the major asset classes. Stocks, crypto, gold, property, it's all coming down. Now, an important point when it comes to investing is that we don't just listen to people that have the same point of view as ourselves. This is called confirmation bias, and it means you're living in a bubble. And it is beneficial from time to time to listen to the opinions of others when they differ from ours, just in case we're missing something. Now, I will share my personal thoughts on all of this at the end of the video, but for now we're going to dig into the full thesis of Harry Dent. And so we'll be covering his big crash prediction for the year, what exactly is it, and how far are things going to fall? Then we'll cover the reason why. Why does Harry Dent keep calling for a crash? Then the one leading indicator to look for, the canary in the coal mine, which signals that the crash has begun. And then we'll finish with a bit of a bonus, the next mega industry, which he says is going to be hundreds of trillions of dollars. Okay, so the starting point is to fully clarify what is Harry Dent's big prediction and why does he keep calling for a major crash?
First wave took us down 38% in the NASDAQ, 28% in the S&P 500, okay? Now we've had this bounce back to new highs in a few minutes, but look, here's a classic thing for stock analysts. When you only see the generals make new highs and all the troops don't, that's called a huge divergence and a sign you're going to see another downturn. So the next wave, if I'm correct, the next wave would have to go lower than the first wave and from near highs in some indexes, not in the small cap and stuff. And that would end up having the stock markets, let's say by the end of 2024, down 50 to 60% instead of the 38 and 28, okay? So that would be the sign, okay, yeah, no, they weren't able to prevent this crisis. The stock markets are reasserting themselves saying, hey, something's rotten in Denmark. That would be the middle wave down, and every major crash in history has had 3 waves down, and the last wave would follow that. But most of the damage should be done in this next wave, and it should happen this year. Otherwise, we really do have a bubble and a non-burst for the first time in history. And I don't think anybody knows what to make of that. Everybody's hoping on a soft landing here. And this is when I'll quit my profession. If we can get through the next 2 years with a soft landing and the markets only go down 20 or 30% and nice and orderly, and then we get inflation down to 0 to 2%, and we don't have any big crash and big failures of companies, then I'll say, you know what? We're in a new economy and I need to retire.
And so he says a major crash happens in 3 waves. And we already saw the first wave in 2022 when the S&P dropped 30% and the NASDAQ 40%. And the next wave is coming, he says, this year, where the S&P is going to drop 50% and the NASDAQ 60%. And so, big predictions for the year. However, this time he did say if he's not correct, then he's going to retire. So let's make sure we also hold him to that. Okay, next up is all about the reason why. Why does Harry Dent keep calling for a crash? Well, in fact, there are 2 reasons.
Simple thing going on here. Central bankers are determined to never have a recession again. They see recessions as a bad thing, which tells me, as somebody who's been involved with the highest levels of Fortune 100 company strategies and many, many new ventures and small businesses on the innovative end, failure is the secret to free market capitalism. Yes, you have to have the freedom to innovate, new companies to grow, and not be over-controlled and all this sort of stuff. But you also have to let failures get cleared out, okay? And that's what they're not doing. When 2008 hit, they saw how bad the economy got. They just panicked and started printing money, and they thought, oh my gosh, $1 trillion ought to get this economy back jolting and going. Well, it didn't. And now they've printed $8 trillion many years later, 14, 15 years of stimulus. I actually count $27.2 trillion, 9 trillion money printing, 18 trillion, basically deficits by the government. I mean, and you don't usually run deficits every year, especially in boom time. So they have fought a downturn with stimulus that nobody would have dreamed of.
And so the major problem, as he sees it, is the insane amount of money printing that keeps happening, and also this ever-increasing debt. First, it started with $1 trillion after 2008, then followed by $8 trillion post-COVID, then $18 trillion from government spending, and it just keeps getting bigger and bigger and bigger. So the question is, how long can this keep going? Well, when you're the one who can create the money, probably longer than we all think. Okay, next up, Harry says there is one leading indicator that we should all be keeping an eye on. And if you're a regular viewer of this channel, then you will have heard this word before. Bitcoin.
Bitcoin is the lead dog, okay? Bitcoin in crypto is, and this is a great sentence I got from an expert, Mark Yusko, the digitization of all financial assets and money. If that's not the next big thing, I don't know what is, okay? So Bitcoin is the lead dog in this new emerging industry, which is much like Amazon and the online retailers in the first tech bubble in the late 90s and early 2000s. That was a bubble in all tech stocks and stock, but those Amazon stocks, Amazon went from 6 to 136 in a year and a half and back to 6 in a year and a half, okay? That's a bubble and that's a burst and that's extreme. So I want to see Bitcoin starting to fail here. And oh, by the way, stocks are still edging up, but guess what? Look at Bitcoin. It went up to 48. That's right where there was resistance. And it's last I saw it was at 42. If Bitcoin breaks down like below 40, that's a sign that we're probably going into another wave down, and then stocks have to follow. And again, so Bitcoin breaking down sharply below 40 is the first wave. And then the NASDAQ, the lead dog in the stock arena, does have to break that first wave down low, 10,088. That'd be the second sign. If they can punch through that, not just test it and bounce off it, punch through that, that means we're going down faster. And that means that a major crash is underway. If we don't see both of those, then it's not really happening.
And so the canary in the coal mine will be Bitcoin followed by the NASDAQ, so basically core risk assets. Crypto was the first to fall in 2022, and so it makes sense that if a major collapse were to happen, then crypto would be the first hit. However, with the Bitcoin halving event coming up in just over 2 months, many are expecting Bitcoin's price to double, including myself. So this really is a pivotal moment for Harry Dent. And if Bitcoin were to double this year, then it really should be time to hang up the hat for Harry Dent. Okay, 2 final things to cover before we wrap up. The first is, where can investors protect themselves from this Armageddon? And for Harry, he says it's long-term government bonds, so something like TLT. And then finally, as a bit of a bonus, he did allude to the next mega industry, and it's to the tune of hundreds of trillions of dollars.
The leading edge segment, which is cryptocurrencies, which is nothing about these stupid coins. It's just that coins are cheap IPOs, okay? So they can start a lot of companies. Most of these companies are going to be worthless and fail, okay? But it is about the restructuring and digitization of the entire financial services and financial asset industry. And I'm the only guy I know that knows in the world how much financial assets in the world. You want to take a guess? $630 trillion, 5 times global GDP at 105 trillion. So that is the next big thing. Crypto is the next big thing because it was acting like Amazon and the .com. But when that guy gave that definition, then I could see it would have to be the next big thing. If it can totally digitize and make more flexible and efficient the entire financial asset structure. It's the biggest number in the world financially. Biggest, I can't even GDP is the next at 105 trillion.
Harvard-trained economist Harry Dent is back with his big prediction for 2024. No surprises here that he is predicting one of the biggest crashes in 100 years, with the S&P going down 50% and the Nasdaq 60% this year alone. He says with the unprecedented amount of money printing and government spending, the economy simply cannot take this burden and things must correct. He says Bitcoin will be the leading indicator to watch, and he sees it going all the way back down to $3,000. And he says the next mega industry will be a $630 trillion market, and that is the digitization of all financial assets. And obviously crypto playing a major role. And finally, my take on all of this for what it's worth. Number 1, major crashes of over 50% don't happen very often. In fact, since 1929, almost 100 years, there's only been 2. One in the year 2000 and one in 2008. So probabilities say that it's not going to happen, and what's more likely is that we get a nasty bear market. Number 2. A nasty bear market has already just happened. In 2022, the S&P didn't just go down by 20%, but 30%, and the Nasdaq 40%. And number 3, I see this year being a big year for crypto, where Bitcoin doesn't actually crash, but does in fact double from today's price. So there you are, guys. Hope you enjoyed. Now, let me know, do you see crypto crashing again this year, or is it going to be an amazing year for crypto? Let me know below. And for now, just to say, if you have any burning questions or requests that you must get answered, then use super thanks below. However, remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new Super Thanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use super thanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.